So David, a lot of investors, they want to get the most return they can for a given level of risk, but very often they're concerned with more than just the amount of return they get from their investments. They want to make investments that make them feel good. They want to invest in the right kind of companies. How can they do that?
So there's a variety of ways. If we look back, a key way to kind of filter out investments or stocks was what's called socially responsible investing, or SRI investing. And in this approach, you would look for a fund or investment that had certain screens. So you could buy a fund that focused on Catholic investors that would screen out companies that do abortions or weapons, etc. A newer approach is what's called environmental, social, and governance investing, or ESG, and that's actually looking for companies who proactively do things that are kind of good for the environment or good for their employees.
And how do you find these types of funds?
So, Morningstar has tools available online that talk about, these different attributes of investments. And then, there are companies that are created just to look for investments that are consistent with the goals of different types of investors.
And how do you, as an advisor, incorporate these types of investments into an overall portfolio?
So to me, a key there, it's actually quite complex. I've actually looked at the performance of these types of funds, especially SRI funds that screen out investments. And one key issue there is that they could have a significant bounce of underperformance. And so if I'm a mutual fund who's totally excluding investing in casinos and weapons and nuclear, et cetera, that fund could radically underperform the market or its peers for a prolonged period of time. Okay. Now, what I've seen, others have seen, is that there really isn't a cost to investing in these investments. In fact, companies that have exhibited kind of positive governance characteristics have actually outperformed their peers on average. The key, though, is saying, okay, what do I care about as an investor, and then how do I add that to my portfolio, knowing that if I do so, the screens I use to kind of monitor that fund or investment might be different than other funds in the portfolio.